All right, rough day, everybody. It is Wednesday, May 18th. Rough day in the old mercado. Let's break it down. We're going to break it down. It broke down. So, yeah, bad news, I guess you would say, headline bad news for Target and Walmart. Actually, both of those places saw strong sales. The problem was their profit margins got squeezed by inflation. All right, now again, that money got paid to somebody. Obviously, it didn't get, what I should say is what Target and Walmart, the extra cost they had to pay for fuel, for trucking, for whatever, cut into their margins. But again, to explain inflation, somebody gets paid more. Somebody pays more. Somebody gets paid more. The income doesn't fly out into outer space, as I always like to say. But that's not the way most people look at it. And clearly that was not the way the market was looking at it today. The last Thursday's low is still intact. Now, I said that was the low and we would be going up. Here's a couple of things, and I'm not trying to, put lipstick on this thing. I'll be honest with you, I didn't expect a pullback like this so soon after we made that bottom last Thursday. Today was a doozy of a pullback, and I definitely wasn't expecting that. And I'm not trying to put lipstick on this, but I have to go with the kind of analysis that I've always gone with, and that's, basically the core of that is the fiscal flows, what's happening on the banking side. It's all about money. Money drives everything. So I'll be honest with you, it's very hard for me to get super bearish when I see the leading spending flows, government spending flows now approaching like 700 billion for the month. And even if we shave off 100 billion and it comes in at another month of 600 billion, so you had, March and April and now May at 600 billion plus. I mean, it's very hard for me. You're talking about that's a 7 trillion annual spending flow by the government. I mean, that flows to income. Yes, a lot of that is drained away in taxes. And I've been talking about, I spoke about how the surplus created by tax filings in April, that was a negative for the market because it was a liquidity drain. And we had a surplus running all the way through basically last Friday, which was May 13th, Friday the 13th. And now we're back in deficit. Now the deficit isn't big. I talked about this yesterday. The deficit now, as of yesterday, is something like 22 billion or 21.5 billion, something like that. But you have to understand that on May 9th, the government had a surplus of 50 billion. So we've had a 70 billion swing in the other direction. In other words, from a surplus where the money, if you use a swimming pool analogy, that water was down below the swimming pool. It was in the water table. It was groundwater. I mean, you needed a well to get that thing back up, and now it has come gushing up back through that hole in the pool, and now the hole is patched, and now it's filled up somewhat. 21.5 billion is the deficit as of yesterday. So, I mean, it's going in the right direction. And again, the government this is important to remember, this point is that the government spends first and then collects taxes after that. That's the only way it could do it. It has to provide the dollars into the system to be able to collect those dollars back. I mean, that's the only way it could happen. It's like you can't drain the pool before you fill it up. You got to fill the pool up and then you can drain it. Okay, so when you think about the sequence, how does that happen? The government spends out 600 billion in a month, and then it takes it back in after the spending, not necessarily at the end of the month. But what I'm saying is it spends first, that flows to income, of the non-government, and then, you know, it's taxed back out. Look, would I like to see the deficit at a much higher level? Obviously. I mean, last year we had like a 2.8 trillion deficit. Right now we got a 550 billion deficit. So that is, you know, there's been a lot of drain from that pool, or draining. You know, if you look at the pool in the aggregate compared to let's say the water was all the way up to the top last year, you know, now it's like 2/3 of the way down, or 3/4 of the way down. I mean, think about, here's an analogy. I just came back from, you know, you saw my videos from my hikes in Big Bend, Texas, in Big Bend National Park. Well, the Rio Grande, or the Rio Grande, however you want to pronounce it, the river that separates the United States from Mexico, I mean, in many parts of it, there's like no water. It's dry. As a matter of fact, we were going to do a canoe trip down the Rio Grande, and all the outfitters, the operators who, you know, run those kind of excursions and trips, and said, well, we can't do it. A lot of the river's dry. So that's what happened. I mean, the pool is way down. I'll give you another example. Last year, and I think I posted videos about this too, I went to Idaho with my son. We went whitewater rafting, and we went bass fishing. And the Salmon River, which is famous for whitewater rafting, I mean, our guide, when we were on the you know, in those rubber rafts, he was saying, well, you see, he was pointing to the, you know, to the canyon walls where the river flows, and he was like, you see that line up there on the rock? And we're like, yeah, that's normally where the river level is. And we were like way down. We were like 6 or 8 feet below that. So I mean, those are some analogies. So the swimming pool, if you think of the swimming pool as an analogy for the deficit, and last year that pool was right up to the brim, even overflowing. You know, now it's down 2/3 or 3/4 of a way. So, but you know, it's still got water in it. And if you break it down monthly, not trying to confuse you, but in April, you know, like if you look at the pool month to month, that was like drained out, and now the water's coming back into it. So it's very hard for me to get really bearish on the situation right now. For me, it's more about an emotional reaction by investors to inflation and monetary policy. You know, I consider monetary policy to be irrelevant. I understand it could have impact on short-term moves in the market because people believe it to be a certain thing. I said it's a psychosis. I said it's a mental illness. Monetarism itself, this myopic, almost kind of zealous, you know, zealous belief in monetarism as the cure-all or the end-all of everything, that's a mental illness. That's a psychosis. I mean, and it is pervasive. It has an iron grip on the investment universe. I mean, anyone who's involved, not me, but anyone who's involved with investing or the financial markets or commenting on those, or analysts, they are consumed by monetarism. And everything is about central banking. Everything is about central banking and these incremental changes in interest rates, you know, 50 basis points, 25 basis points. I mean, it's really, you know, I don't know. I'm not a psychologist to analyze or to give an explanation as to why, you know, people have become so fixated with that. Really not understanding underlying what that is. I've been through it so many times. I mean, somebody, you know, somebody pays more, somebody gets paid more. I don't know. I don't understand why that's so hard to understand. Plus, it's a price setting thing, you know. The cost of credit is reflected in the cost of all goods and services. You raise the cost of credit. Look, your credit card payments go up, your loan payments go up, everything goes up. You know, it's a kind of an inflation in and of itself, but you're talking about incremental moves. You're not talking about, going from 0% to 10%. You're talking about going from 0% to 25 basis points, or from 25 basis points to 75 basis points. I mean, come on, seriously. But then somebody else is receiving that money. People who own treasuries, and don't forget that the non-government, us, the economy, we are a net creditor to, the government has, what? They're always talking about it. Oh, there's 30 trillion in debt. The government is 30 trillion in debt. We hold that 30 trillion, so the government pays us more. Anyway, I've been through all this stuff. I'm not going to go through it again. Let's talk about the market. The last Thursday's low is still intact. Today was an ugly day. Look, I'm not going to sugarcoat it. My account has seen a big drawdown. My stock account has seen a big drawdown. I continue to buy into this. A lot of stocks are really, really attractively priced right now. Warren Buffett said something, I just read it today in some article that I was reading. He said, when the market's going down, don't look at the market all day long. I mean, this guy, he's 91 years old. He's worth $116 billion. The only thing he has ever done in his life is invest in the stock market. He never invented anything. He never created any new business or came up with any new product or innovation. He bought stocks and he held on to them. I mean, if there was one person to listen to, I mean, you don't have to listen to me. A lot of people, you think I'm, I don't know what I'm talking about, or I'm a quack, or this or that, that's fine. If there's one person to listen to, who's, by the way, richer than any hedge fund guy, flashy hedge fund guy who's in and out and trading, and even these guys who run these algo shops, like what's his name, Citadel, Ken Griffin, right? They buy the order flow. Citadel, what's their business model? They buy the order flow from like Schwab and Fidelity. So wow, what geniuses. They see the orders coming down the pipe and they just jump in front of it. So that's just legalized front running. Okay, I can tell you this. There was a time years ago, not even that long ago, I would say probably, 2006, 2007, there was a time when Congress was considering making that illegal. Because that's front running, all right? And actually, the SEC doesn't allow front running. Like for stockbrokers, you're not allowed to do that if you're dealing with clients. But these guys, what do? They get lobbyists. They basically pay off the lawmakers. Like that's the way the system works here, in the United States and just about everywhere in the world. Government capture. And so that was pushed aside. That was squashed. The idea of banning these algo shops, because it's basically legalized front running. So I'm saying even the top guys who run these algo shops, or the top hedge fund guys, who you might look at them and think, wow, they're like these swashbuckling pirates in and out, these traders, like you might have a romantic vision of these guys, not romantic in the love sense, but just thinking like, you're in awe of them. Like, I want to be like one of those guys. I mean, look, basically they make their money from management fees, a 2% management fee on whatever, $10 billion. You're making a lot of money. And if they make a 2% return or a 1% return, and then they get 20% on that, yeah, then they're rich. Then they have a house, some big swanky pad in the Hamptons or something like that. But Warren Buffett is so far above these guys, and he's giving you all the time wisdom. Guy's 91 years old. He's still doing it. By the way, you notice he was really, really quiet in the markets. Like he really hasn't been very active for a long time, because we were shooting straight up, starting in mid-2020 and then all last year with the big fiscal packages and stuff like that related to COVID. You didn't hear too much about Warren Buffett. He has this incredible discipline to sit out and wait like a tiger ready to pounce when he sees an opportunity. And now, you know, it's been all over the news. I don't know if you caught any of this, but I mean, he has been really, really active as a buyer. So, you know, you may not know anything. You may think I don't know anything, which is fine. But I mean, pay attention to a guy like that. I mean, if you're going to coattail anybody, coattail him. And maybe you don't know which stocks he's buying in advance, but the very fact that he's like really, really active right now and aggressive, that should tell you something. That should tell you a lot. Guy's worth $116 billion, never invented anything, never created any new business, no product, no innovation, just basically buying in the stock market. He's not a trader in and out. Anyway, I just wanted to bring that to your attention. So again, it's hard for me to get really, really bearish when I see these flows. You know, I'd like the deficit to be higher. For me, it's going in the right direction. You know, we were a 50 billion surplus just, nine days ago? And now we're a 20 billion deficit. So we had a 70 billion positive swing. The water's filling back up in the swimming pool. Okay, it's coming in slow. But you got, you know, 600 to 700 billion in monthly spending flows. I mean, that's a lot. That's big. And, you know, as far as the Target and the Walmart news today, the takeaway for me is sales were really good. Sales were really strong. Their margins got hurt, you know, but that's what happens in an inflation. But again, there's two sides to the coin. Somebody got that additional cost got transferred as income to some other entity, all right? Whether it's trucking companies, whether it's fuel suppliers, it could be the foreign sector. It could be, you know, look, let's face it, Trump put tariffs on, you know, these tariffs too. Don't forget these tariffs have raised prices too. So, I mean, you know, it could flow out to the foreign sector. And I've been saying that is a leakage to U.S. GDP because we run big record trade deficits. So that is a leakage. It's not money going out into outer space, but it's money going out to the foreign sector. But if it's a global economy, then it's all contained. It's one system. It's a self-contained system, a closed system. If you consider it like the global economy, it's a closed system. So it flows out to another country, but then we see good results in China or we see good results somewhere else, and then everybody gets excited and starts buying. I don't know. So let's see what happens. I mean, I don't think we're going to be running a surplus. Government's not going to be running a surplus. I don't see those leading spending flows coming down anytime soon. As a matter of fact, they've been going up. I just sent out a chart to my subscribers. I mean, they're going up like this the whole fiscal year. They're accelerating even. You know, and that could be, again, I said, that's Social Security, that's Medicare, that's Medicaid, and that's defense. Those are the four biggies. And three of those, Social Security, Medicare, Medicaid, those are non-discretionary. And let's face it, in this country, in the United States, defense, military, that's non-discretionary too. It'll never be cut. Anyway, that's it for today, folks. All right, hang in there. Don't get too, worried. Don't get too emotional. Don't get too panicky. And do what Warren Buffett does. He's buying now. Bye.